Thinking you can open a company in the UAE and pay 0% tax? Think again. Corporate income tax in the UAE is now 9%, and if not done right, you're at risk at being reclassified by your home country's tax authority and getting fined and paying way more than 9% corporate income tax. And it's not just about the tax laws, it's about how you structure your business, your life, your family, and pretty much everything, and that's what you need to be careful about. Watch this video till the end. I'll show you mistakes that have cost business owners dearly, how to avoid them, and how to set up in the UAE in the right way, in the most tax efficient way possible. Since 2023, Dubai is no longer a tax haven. You're looking at 9% corporate income tax for all businesses that are set up in the UAE. Whether you're in a free zone, an offshore, financial jurisdiction, doesn't matter. If you're incorporated in the UAE, the FTA will apply the 9% corporate income tax to you. Now, if you don't do things right, you're at risk of getting reassessed, getting penalties, and overall, most probably, the whole setup will cost you way more than in your home country. And you don't want to be in a situation where setting up in the EU was supposed to be tax efficient, and now suddenly it's costing you more than if you had stayed in your home country. Imagine this, you open a company in Dubai, and you're doing more than 3 million dirhams of turnover, and you decide to put all that money into your personal account as a salary or as compensation. And you think you're done. That's it. I have no net profit, so I have no corporate income tax. Well, you're wrong. The FTA, a year later, looks at your accounts, looks at your tax filing and says, listen, he's doing about 4 million dirhams of turnover, but he's paying no corporate income tax. How's that possible? And then they ask you for an audit, but you have no clue what an audit is. And at that point in time starts the problems. The problems include you not having proper documentation, you not understanding arm's length principles, you not having any transfer pricing documents if that's your case and you have other companies abroad. And if any of the documents that you're going to provide the FTA have inconsistencies or problems, you are going to get fined. You're going to get penalized. You'll have most probably corporate income tax that is way above and beyond what you actually anticipated. And this whole UAE setup is going to be a pain for you because it will cost you time, money, and stress. And you would have wished you stayed at home. We've been doing this for about 11 years. I have experts in place who have so much experience working with different tax authorities and consultants who've done big businesses and small businesses. And even after all this experience that we have when we're doing documentation, FTA is still looking at small little things and details that could go wrong and asking us questions, coming back to us with more and more and more details to provide. So if you think you can do this on your own with ChatGPT, you're wrong. Now, one of my clients left France, went to Bali, and set up a UAE business. And it's quite a common case. But he didn't exit tax in France, didn't notify the tax authorities that he was leaving or that he had changed tax residencies. And a few years later, when the tax authorities in France discovered that he was still doing business with French clients, but he was based out of Bali. However, his family was living in France, and he had a Dubai company. They looked at the whole setup, looked at him and said, listen, we believe that your business is just a shell company and that your corporate income tax should be classified as French corporate income tax. And that brought his 0% corporate income tax in the UAE for e-commerce business to 45%. And in addition to that, penalties and fines and VAT fines and so many other fines that French tax could imagine. And all of this could have been entirely avoided if he had just set up one call with the right strategist. Now, let's clear up the noise. Yes, there's 0% personal income tax in the UAE if you are living here, and if you are not living more than 183 days in any other country, and that's really, really important. Your fiscal residency as an individual is based on where you live more than 183 days. The UAE doesn't care where you pay taxes because it has zero, but other countries do care, and that's what you should care about. We have corporate tax in the UAE of 9%, and as I said before, it's applicable for everybody. Everybody who is in a free zone, an offshore zone, a financially regulated zone, it doesn't really matter. You have to register for corporate tax. These are taxed on your profits. So if you're doing more than $100,000 of net profit, that's when the tax starts to apply. However, if you want to structure yourself in the right way, and if you want to try to get a qualified free zone person qualifying activity and get yourself to 0% corporate income tax, in the UAE, you still can. Now, I'm going to define what is a qualified free zone person. A qualified free zone person is, number one, some entity that is established in a free zone. Number two, economic substance. You must take managerial decisions in the UAE, have a license and an office lease in the UAE. A physical office could help, employees could help, local clients, international clients would help, and of course, banking and revenue helps. Number three, you must earn qualifying income. That is the income that is qualified as the right one from the Federal Tax Authority's perspective, and we'll go into the activities in detail later. Number four, you must comply with transfer pricing rules and arm's length principles. Number five, and the easiest one, you must file your taxes on time and be registered for corporate income tax. And of course, if you miss any of these and you don't satisfy any of these requirements, you will fall back into 9% corporate income tax. And if you file at 9% once for the next 4 years, you will not be able to get the 0% tax status anymore. What qualifies as qualifying income as per the FTA? Number one, manufacturing and processing. Number two, holding shares and securities. Number three, headquartered businesses. Number four, treasury and financing for related parties. Number five, shipping and logistics. Number six, fund management and wealth management regulated. Number seven, ownership and operation of ships. Number eight, reinsurance and captive insurance. Number nine, distribution of goods or materials from a designated zone to outside of the UAE. And number 10, any auxiliary activities related to the above. There is also a de minimis rule. If your non-qualifying activity income is less than 5% of your total income, you can still retain your QFZP status and be taxed overall at 0% corporate income tax. And that means that non-qualifying income must be less than 5% of your total income or 5 million dirhams maximum, whichever is lower. If you cross that line, you lose your QFZP status for the next 4 years. VAT is 5% on most goods and services in the UAE. Now, if you're in a designated zone and you do an export-import of goods, it's possible that you may not qualify at all for VAT. But for 99% of the other businesses, VAT is mandatory. And above 185,000 dirhams, you can register for your VAT number. And above 375,000, you have to, or you start getting penalized. Now, that's important because the UAE and the FTA are enforcing and looking at VAT violations more and more, with penalties ranging from 10,000 dirhams to 500,000 dirhams for non-VAT compliance. There's no tax on dividends and capital gains and repatriation, and that's a massive advantage in the UAE. If you have a company in the UAE and a holdco in the UAE, and the UAE company dividends to the UAE holdco, no tax. If you're doing dividends to yourself, no tax. That's important because from a personal perspective, when you're looking at a big exit or a big number at the end, structuring yourself in the UAE starts to make a real difference in the end game. And one of my favorites right now, and somebody that everybody should be aware of, there is a small business tax relief program in the UAE that makes you qualify for 0% corporate income tax in 2025. If you do 3 million dirhams, less than 3 million dirhams, you can apply for small business tax relief and get 0% if applied correctly. In 2026, same thing. And for the moment, that's it. We don't know yet if they're going to extend the program or not. Most probably they will, but we don't know what the thresholds will be. So we have another 2 years right now to enjoy for all small business owners 0% corporate income tax as long as you're making less than 3 million dirhams of turnover per year. Now, if you're still thinking that you can set up a company in the UAE, pay zero tax, and I don't know, for example, stay in your home country and be there as a fiscal resident, single business owner, single shareholder, you didn't get my point. You need to understand that the UK, Australia, the US, France, it doesn't matter, all these tier 1 countries that have high tax, they look at different things from a tax perspective, not only when your business is incorporated, but also where your vital center of interest is, where your family is located, where your kids go to school, and where you spend more than 183 days. So it's important to understand that getting away from actual tax authority in your home country, if you haven't exited that home country, is super complicated. It doesn't mean it can't be done. It just means that you can't eyeball this. You have to prepare and strategically look at overall how to structure yourself properly. So if you want to avoid reassessments, if you want to avoid tax penalties, headache, stress, loss of time, waste of money, illness, keep watching. You will get the right advice and the right solution that I explained later in this video. And if you want more tips and more knowledge on actually how to structure you correctly, subscribe to the YouTube channel, and I will be sharing more practical, great examples that you can apply for your own business. As I was saying, if you are applying for a UAE business setup and you're incorporating here and you're starting to move yourself even here, but you haven't done the minimum in your home country, you're at risk. What you need to do is look at how to exit tax your home country. This is extremely important. When you move to the UAE, after you've established your company, opened your business bank account, got your visa, and rented out a place here in the UAE with an Ajari or a tenancy contract, then you have a deed bill in your name. After that, what you need to do is look at what kind of letter and notification do I need to do to the tax authority of my home country to let them know, guys, I'm moving. And I want to fulfill all my obligations to this tax authority and basically make sure that they're aware I have moved myself to the UAE. This is typically advised by local tax consultants in your home country that you can reach out to quite simply. There's a ton of people available in every top tier and tier 1 tax heavy country. This is something that a lot of people do not do and then end up in trouble. I mean, you can end up living in 2 different tax jurisdictions and paying in both. This is why proper strategy matters and proper planning matters, and why you have consultants that do this for a living, because it's not so simple. So get the right advice, get yourself set up in the UAE, this is the right move, but also make sure to close your obligations in your home country and sever ties with the local tax authority. And I'll give you one more example, which I want really for everybody to hit point. Imagine you live 100 days in Dubai, 120 in Canada, and the rest you travel around the world. Technically, you're not staying 183 days anywhere, but you haven't exited Canada from a tax perspective, and Canada does not want to let you go. Why? Because they're going to look at the center of your vital interests, your address, and you haven't told them that your new address and your new principal place of living and residency is in the UAE. And that is setting you up for a lot of stress and a lot of sleepless nights thinking about how much you owe the tax authority that is just simply gonna take it from your Canadian bank account. If you want to stay compliant and really enjoy the 0% personal income tax residency in the UAE and be the most tax efficient from a business perspective, this is the solution and these are the steps that I would recommend. Spend at least 183 days in the UAE. This makes you a personal income tax status of 0% and a fiscal resident of the UAE. This is very important for every other country. The UAE doesn't care, but the other countries really do. You can't be a resident here without having a residency visa. Get a residency visa, either for your company or a golden visa or some other visa, but you need to get it because this is the only way you can later on receive a tax residency certificate that will be addressed to any other tax authority in the world and give you a document that protects you for that fiscal year. Set up a company in the UAE and open up your business bank account and do business as normal. get contracts together, do invoices, have a normal salary, and have a place of business in the UAE. If you do that, you set yourself up for economic substance and you're preparing yourself for the right way to move forward in the future. Don't manage your business from another country. Running a business in Dubai from another country with 0 employees locally, no physical presence in the UAE, you are most probably going to be at risk from a tax perspective. So don't do that. Come here, take managerial decisions in the UAE, have employees in the UAE, if you can afford to, of course, if you're a bigger and larger business, and try to do as many UAE and local things possible from a tax perspective. It's important. Exit your previous tax residency properly. If you're in the UK, Canada, Australia, any European country, to be honest, or any high tax country, any country at all, you need to exit your tax residency in the right way by notifying your tax authority that you're leaving, you're moving, and that you have a new address in the UAE. And you can only do that after having set up a business, set up yourself, getting a visa and a residency, and of course, getting an address here. Now, these notifications are not the same in every country. They're different processes, procedures to exit tax from your home country. And you should always consult with a local advisor. We can help in some ways, but mostly we're going to do a pass to somebody that we know within our network who does this correctly and then afterwards protects you from a world of pain later on. You need to maintain documents. I know this is something that entrepreneurs hate. Administration, documentation, invoices, contracts, but this is something that you need to have. And the best way to do that is just to have a folder where you are storing everything. Either it's for your accounting, either it's for your legal. I don't know, for operational purposes, you already should be doing it. But if you're not, now's the time to start if you're in the UAE. Because the FTA can come back to you and ask for documents as far as 5 years before. That's why I recommend for all businesses to have your financial statements audited by the end of every year. That will protect you as well. If you're in a free zone, meet your QFZP status. What does that mean? Economic substance. That means doing your filings and notifications properly. That means not exceeding the de minimis threshold. And of course, only working within your qualifying income activity. This is important if you want to keep yourself at a 0% corporate income tax status and not go into the 9% status. And of course, for small business owners, check if you qualify for small business tax relief. It's not just the 3 million dirham threshold, but for most parts it is. If you're under 3 million, most probably you qualify, unless you're a QFZP, for small business tax relief. And in that case, 0% corporate income tax until 2026. So 2025 and 2026 are the right years for you to look at to be within that threshold and apply for small business tax relief. On this channel, you'll get real info, real cases, and actionable insights so that you can apply to yourself, to your life, and make yourself as tax efficient as possible, live freely, and earn anywhere you want in the world. I've worked with hundreds of clients in different strategies with different scenarios, lifestyles, different setups, and we've been able to tailor things to everybody and to their preferences as much as possible, of course. If this video was helpful, please like, comment, and subscribe. I will be sharing more practical information about tax, more case studies, real-life examples, and digging even deeper. If you want something specific, just comment in the comment section and I'll look at making a video just on that subject that you commented on. Now, this was Peter from GCG. I'll see you in the next video.